Welcome to Life Planning 101, brought to you by Smart Money Group and Kennedy Financial Services in Eastland, Texas. Tune in every week as we share important information to help you and your family live life on purpose. Insurance, investments, legacy and tax planning, and much more. All covered now on Life Planning 101.
How we doing, everyone? This is Henry Knowles sitting here with Sam Barker and the Aaron Kennedy for another episode of Black and White Market Minute.
Welcome, everybody. It's been a while. Golly, it feels like it's been forever since we've been on. I think we've been out of town, lots of traveling. Sam just got back from Yankee Land and
Cheeseville.
Frozen tundra. Do have a sad thing to announce. Our very own Henry is leaving us.
We've been working on that for how long have you been here, Henry? And he finally
16 months?
Yeah. So
Finally got him out the door, but I'm kind of looking at it as more of a betrayal. You know, you come down to Texas, you know, most of the time, you know, we can convert people, but
no loyalty to Texas Tech either.
No.
I'd still have my loyalty. I'm going to the game tomorrow.
He is wearing a shirt right now. He is going to the game, so
Two-faced.
but we're sure going to miss you, bud.
Yeah, I miss y'all too.
And we might have to call you and get back on. We'll just do this through the phone.
That'll work.
So, golly, I don't even know where to start. I've got a lot of catch up, or we can just talk about what we see going forward.
Yeah, well, the market loves risk, number one. I mean, just keeps running higher, at least part of it.
Yes, that's exactly right. This has been quite an entertaining quarter so far. Basically, if you look out there and you look at the strategies with no risk, they have done nothing whatsoever, almost exactly flat. Even things like momentum strategies, those have not done very well either. And I think a lot of that is just the volatility of it all. And some of the biggest names have come down, Palantir, NVIDIA, both of those, which have done fantastic for the year. But those are both, you know, pretty big on the holdings, and they've weakened a little bit. That's such a bad word. They've taken a little bit of breather, so it's given you a little bit better buying opportunity here in the short term. But you know, it's been a very, very strange quarter. But you know, no matter what the pricing is, I think I'm getting more and more excited about everything that's going on. But you know what? Before we jump into that, why don't we talk about the big news of Netflix buying Warner Brothers? Not big on the Hollywood scene, but I've seen a lot of people not want this to go through. So I had to look it up. It's like, what's wrong with this? Less companies, better competition, more efficiency. Why is that such a bad thing? I learned quite a bit today. Number one, there's not a whole lot of companies out there that are producing movies. Very, very few. Where are we at? 5 right now? I think that's the deal. And, you know, since 2019, help me with these numbers, we used to have about 24 movies come out a year, blockbuster movies that go into the theaters. Each one of those 24 go into thousands and thousands of theaters. And that has dropped down to 14 a year. 44% decrease. And the biggest fear is Netflix is not going to want to put movies in the theater. They're going to much prefer it to be streaming, and you have to go get a subscription to them and use them, and that's going to put bigger pressures on the theaters. But I never thought about that. I mean, 2019, you go back and think about that, I was thinking COVID. You know, couldn't go to the theater. You know, and then those started struggling, and, you know, they just couldn't recover.
Well, and the theaters turned into, I mean, they were meme stocks at the time.
Yes.
I mean, it was kind of a joke.
AMC.
Yeah. It was just a broad pessimism against the theaters for good reason through COVID.
Yes.
I mean, plus another point is, I mean, theaters nowadays, you can spend $11, $12 on your Netflix subscription. You have the movie forever. a movie ticket's what $11, $12 now. Popcorn's gonna be another $10, $20. I mean, you're spending a lot
Oh
on
my
concessions,
gosh.
but that's how theaters make their money. But people
It's
would rather
ridiculous.
stay home. Yeah.
Yeah.
Yeah, I remember, nobody make fun of me, but I remember going on dates in high school and it was ridiculous.
Back
know?
when they called it a picture show.
Yes, and we had to drive up and it was in, oh, come on, Gus. But still, even then, it was $8 a ticket, $7 popcorn, $5 Coke. But it was pure. All it was Coke and popcorn candy. Now you go to those things, you can get ice cream. You can almost get anything you want. They're pushing so hard to make those sales. It's incredible about what you could buy there. But, back to the Netflix thing. I'm guessing from a competition standpoint, that makes a lot of sense from the theater standpoint. One of the other big things, and this is kind of where my mind was going, Warner Brothers, there was a big thing that Trump was pushing, was it Paramount, to buy them? And the Democratic Party was throwing a fit because one of Trump's allies would be in charge of CNN or have influence over CNN. And they were very, very worried about CNN turning more as a centralist form of government or even a right-wing piece of government. And that made complete sense to me. But now that's not the case. I think both sides are going against what's going on. So it's going to be interesting to see what happens. Very, very interesting to see what happens.
On something that everybody might relate closer to. You see Warner Brothers on a bunch of the intros. It's kind of a classic. But then,
What's up, Doc?
yeah, all that stuff and the big WB. But what everybody probably more closely relates to is Netflix just bought HBO Max. So is that going to be the way that Disney did it whenever they bought the Star Wars and developed
Yeah.
Marvel? You had those different sections of Disney. Is this going to be an HBO Max section of Netflix, or how's that going to consolidate, and what does that do to the pricing? I mean, we're talking about pricing on those streaming services, and Netflix just bought or is in the process of buying one of their largest competitors. And so maybe the streaming wars are over?
Maybe. That's a great point. I sure know we're not paying $9.99 for Netflix a month anymore.
Yeah.
And that's one of the concerns is pricing. But compare that to cable. We're not paying $113 a month. Pricing probably will go up. But overall, I still think the consumers getting quite a good deal. But who knows? Lots of moving parts on all of this. But regardless, if you're hearing whether it's a good deal or a bad deal, that's kind of what the thinking is behind it. So, I think we're an investing podcast, so let's jump into that. What's going on in the future? We've already spent a lot of time, or a little bit of time, on what's happened so far this quarter. But I'm really thinking in next year is going to be a really, really great year, and I've got a lot of reasons for that. I think if you've been listening to us for a while, y'all know I felt that we've been in a recession for quite a while. The companies in the market, the majority of them have not done well. Hey, what were you telling me earlier? The bottom 25 or 250 companies that represent. What were you saying?
Yeah, the bottom 250 companies in the S&P 500 make up 8% or 10% of the allocation. It's one of those two
Oh
numbers.
gosh, that's just incredible.
Yeah.
And even right now we've had the Magnificent Seven, and then we got a handful of AI stocks, but nothing else has worked. We've seen. It's silly to say it. Where we are as a percentage, but unemployment, that's been picking up. We talked last time about government employees, employment, and how much of a struggle that's been. I didn't read the article, but I saw headlines before we walked in here about bankruptcy listings. Those are going through the roof. Some of our tried and true economic measurements of production and that kind of thing have been struggling. And it's not new. This has been going on since 2023. So
And the trucking recession since 22.
yeah,
I mean, it's
that's
just,
exactly right.
just an indicator.
That's yeah. If we're not selling anything, we're sure not shipping anything, and we've seen it. You know, we know it. So the very fact that we haven't been lowering interest rates to goose this economy, it's been making me scratch my head, and that's where things get interesting. You know, Powell and Trump. I don't think either one of them's invited to their own Christmases. You know, they do not get along. And I really think that a lot of this interest rate move is politically driven. And that's about to change. It looks like, I think the front runner right now is Haslett. Is that right?
Kevin Hassett, yeah.
Kevin
they're
Hassett.
both Kevins, so you got to go by the last name.
Yeah. Kevin Hassett. And he's going to lower interest rates.
Yep.
So that should do a fantastic thing for our economy. I mean, pushing our economy higher.
Well, and something super. It's going to be very entertaining to watch. Anytime you see him on the news, CNBC or wherever, I mean, he's always got the biggest smile on his face.
Oh my gosh!
He's explaining the economics behind whatever he's talking about, and pretty plain and easy to understand terms instead of. And he's always pretty forthcoming. I mean, and we'll see if that changes. But typically, what you get from Powell is kind of the same thing all the time: a little monotone,
Yes.
plain speech with a little bit of vague references. But then Kevin Hassett, he's always super happy. He's always happy to talk about whatever the economics look like, and he's dovish or ready to cut rates. And then a couple other things that I've been listening to some of the other managers in the world talk about. Number one is he gonna, unofficially obviously, but owe Trump any favors? So if Trump, winks at him through the corner of his eye, is there going to be some kind of political influence there? And then the more interesting thing, if that's true or not true, the Fed independence has been a huge question. So, half of the political party is going to say, or the political conversation is going to say, well, the Fed is no longer independent. So, I mean, if we would get rid of the Fed, that would be, this is a step in that direction if we could,
Yeah.
from that political side. If it's just going to be a presidential tool, it would be interesting to see if they'd be ready to get rid of it or not.
Yeah, there's a lot of people that are talking about getting rid of the Fed. Boy, that's scary for me, just because historical. Why do we have a Fed?
Mm. Yeah, you lose a lot of that backstop.
Yes, but the whole, whether it's politicized, whether it's independent, I would say it hasn't been in a long time.
Mm-hmm.
I mean, even during, the Obama tenure, where were interest rates? I think everything is politicized, even if we don't realize it. I mean, you can sit up there and preach that I'm not doing this for political reasons, but you're going to make decisions on what's going on in the economy and whether you like it or not.
Mm-hmm.
So I absolutely do not believe that they are independent.
Well, if you look real basic at the level of politicization in the world from whenever the rates were the highest back in the 70s and 80s to today, it's pretty correlated. As rates come down, the world gets more politicized.
Yeah.
So it's kind of, that's a simple answer of lower rates is a better economy, means whoever's in power is hopefully trying to keep power. It's...
I've never heard that before, but you're exactly right. But is that just perfect timing? The whole world's got politicized at a very, very rapid pace if we're just looking in decades. So
Yep.
I got to look into it. That is fascinating. That's getting my mind to work. But back to it, I think it's going to be huge. Our economy's needed it. I know the S&P 500 doesn't have exactly 500 stocks, but if I look at everything, 475 companies have needed help at the stock market over the last 3 or 4 years. Doesn't matter what side of the aisle you're on. We all go to the grocery store. We all are feeling the same things when we need to buy something. We know real estate's hard to move right now. Everything is super expensive. You tack on our debt there. It's hard. It's just a tough time right now. And if you start thinking about our kids, people that are just now graduating, what is a first time home buyer? You're in the 40s now.
Mm-hmm.
Is that? I mean, how do we do it? And I don't think we can do it at super high interest rates. You know what? I can tell you how bad it is. It's being thrown around that we're going to have a 50-year mortgage. 50-year mortgage. I think that doubles your interest rate costs as it is. And I'm not going to be perfect on this, but I think already you buy a home on a 30, you're going to double that in interest, right? So if I have 100, I'm going to have somewhere around 250,000 in interest cost. So on a 50-year, that jumped up to 500 or so.
Well, and if you even simply think of how the amortization schedule is going to work, you're going to pay most of that interest up front. So your equity in the house is going to be very close to zero for the first 10 or 15 years.
$100,000 loan, you're putting $100 back in principal or something, and then that's not exact. I'm exaggerating, but it's that severe.
Mm-hmm.
But if we're even thinking about that, I mean, why not go to the root cause and say why? Why is this happening? Well, I can tell you, interest rates too high. We can't afford it. We don't have enough supply. There's not enough homes being built. If we flooded the market with homes, that's automatically going to bring down the cost. So there's a lot of things going on. And if you look at it, what's better? Get a 50-year mortgage or spend 10, 15 years paying for an apartment? Probably the cost is the same, but at least if you get your 50-year mortgage, you're going to get the inflation part of your home over time. It's still better for us, but it just hurts. It hurts thinking about that cost. What are some other things?
I mean, we've been talking about concentration. I mean, one of the only ways this market is behaving, I'm looking at it right now. I mean, NVIDIA, Apple, and Microsoft are each and individually bigger than our consumer defensive allocation, our energy allocation, our utilities allocation, our real estate allocation, our basic materials allocation in the S&P 500. So, I mean, Microsoft is 6, Apple is over 7, and NVIDIA is 7.5% allocations in the S&P. And then the consumer defensive it's at 4.8% of our S&P allocation. So it's just crazy. I mean, it's even NVIDIA by itself is bigger than the total industrials sector allocation. So, I mean, it's the top 10 positions in the S&P 500 make up 40% of the allocation. And so you're heavily correlated with obviously those top 10 positions. Yeah. And with NVIDIA, we were looking at it earlier, Bitcoin was one of the top performing assets or the top performing asset class
in the world.
Yeah.
All of history up until this year.
Well, as an asset class, I think it probably still is, but NVIDIA has passed it.
Yeah, that's incredible. I was reading an article not too long ago that said nothing else matters. Nothing matters anymore. Something like that. And it was talking more about passive income. And that if you are trained to invest, we look at certain things. How expensive of a company is this? What's the economy doing? Can they make more sales? And it's surmised that it doesn't matter. Does not matter. And the reason behind that was passive investing. Because we have, let's just say, the S&P 500, whether it's SPY, VOO, IVV, you put your money in, and how much is going to the Mag 7? Did you tell me 40%, or was that on the...
That's the top 10 is 40%.
That's top 10,
I mean,
so-
but the Mag 7 make up the
Top-
top 7. And
Yeah, top 10 companies, 40 cents of every dollar goes into 10 companies. So, hey, you contribute your 401k, 40 cents goes into these companies. What if the sales go down? Doesn't matter. I mean, you're still getting money put in. It does not matter. What if the economy goes down? Still make my 401k contribution, still goes into that stuff, which is mind-blowing. I think at the time, as Michael Dale came out and said he was giving almost $7 billion to all the kids. Everybody's going to get a $250 children's account, and I haven't looked into that. Don't know what it looks at, but hello, how much of that $7 billion
goes straight back into it.
straight back to NVIDIA, Microsoft, Meta? What if sales go down?
Doesn't matter.
Amazon, Microsoft, Meta. I mean, it does not matter. The machine is working, and I'm not being. I'm strictly talking math. I'm not being a conspiracy theorist or anything like that. That's just the way the world works. And who was it? Was it Michael Berry? What did he just say?
Steve Eisman, yeah. He said.
Okay.
He said that. And I don't have the exact reference. I think it was on a podcast I was listening to. Said 90% of the market now is going to be passive investors. 10% of the market is going to be those who are active and working
10% of the market
for risk-adjusted returns.
Hey, are you expected to go bankrupt over the next year? Well, I'm not going to invest in you. 90% of them say it doesn't matter. It's in the index. We're buying.
Mm-hmm.
You know, that's astonishing.
Yeah, and I'm part of the consequence of that is the high price market.
Yeah.
And every time I start complaining about price, Aaron always points me back to history. The 15 was the average PE of the S&P 500 in the 1900s. It's gotten below 20 once since 2000, and that was during 2008. And so, I mean, if you're trying to buy cheap companies, it is extremely hard.
If you're buying cheap companies today, you are buying cheap companies. That's just the way it is. And I know we speak a lot about shorting Tesla. Why does that not work? For every dollar Tesla makes, you're spending $300? The PE is 300. They make as many cars a year as I do. That's being silly. But they're not producing a whole lot. Earnings are not very good.
And if you compare them to the industries that they're in, I mean, considering that they're a car maker technically, regardless of the AI spin or the robotic spin, I mean, the other automakers are all priced in the teens.
Yeah.
And so, I mean, if you compare 300 to the teens, it should be a perfect, fantastic short. But the other thing that you're shorting is kind of a religion of the future, optimistic future.
Yeah. And I sure don't want to get tweeted by Musk. So I'm going to go ahead and say I'm a huge fan of him. What he's been able to accomplish, SpaceX, the satellites, I would spend $300 for his mind and his ability. But, man, I'm just one person. We're talking the whole market. Everybody out there has that same belief. And the company has not done that yet. It's a hope. Man, I hope he has those humanoid robots that kill it. I hope we have driverless taxis. Some of the things that he has accomplished are out of this world. But what other company in the world can be where he's at and be priced at that much. He just got voted in that he's going to get $1 trillion if he hits certain goals.
At the expense of the
That's like
shareholders.
33% of the shareholders, right?
Yeah.
Is that the dilution, Henry? Do you know that?
25%.
25, something like that.
Yeah.
So,
Well,
I mean-
that is if Tesla over 8Xs over the next, 10, 12 years, something like that.
Yeah.
So everything Elon's preaching, it has to play out and even exceed expectations, which I don't think anyone's ever made money shorting Elon Musk.
yeah,
So
I'm not going to.
Bill Gates has famously lost a lot of money doing it.
yeah.
And
Now-
they're
now-
actually, relative to before 2022, they're actually relatively cheap right now too. I mean, if
And-
you look back historically, it's just insane how expensive this company has been in the past, and they're one of the Mag 7, so there's a
Yeah.
reason for it.
And honestly, I think he pulls it off. I honestly believe he pulls it off. He is brilliant. But like you said, it's a religion. And what I said, nothing matters. Nothing matters. So if you start looking at how difficult of a market this is to invest in, and then we throw in the fact that nothing matters, what do you do? Be disciplined.
Yeah.
Why? Throw everything in the Mag 7, So, back to it. Very excited about the Fed lowering interest rates. The Fed's been doing some other stuff. They've been doing quantitative tightening for a while, so pulling money out of the system. And a quick recap, just basic banking. If I deposit $100,000 in the bank, put it in a CD, the bank gets to loan a multiple. They have to keep so much reserves. So if I say it's 5x, if I put $100,000 in the bank, they're going to pay me interest of 4%, so I'm going to get $4,000. That bank gets to turn around, and if their leverage ratio is 5 or reserve ratio is 5, they get to go out and loan out $500,000. So my $100,000 created $500,000, and then they're going to get an interest rate on that. So let's say it's 10%. That bank makes $50,000 for paying me 4. That's the velocity of money. That's how our banking system works.
And banks aren't paying for either.
Yeah. I know. We're about 3.7. I just bought something. Bought a CD.
Well, that's what I guess you're thinking CDs. I was thinking
CDs, treasuries.
savings rates.
Yeah, we're at good point. But that's how the system works. So anytime you see the Fed pushing money in or pulling money out, it has a huge effect on our money system. Well, the banks ran out of money. I don't want to say don't. That sounded wrong. 'Cause banks did not run out of money. The system ran out of money. It was very, very difficult for banks to loan and move money because the Fed has been pulling things out so much. One of the tools that the banks use is the repo system, and they've been very active in the reverse repo market, which basically means that the Fed will go to the bank and say, "Hey, I'm going to sell you these assets," and a lot of times, they're treasuries, mortgages, something like that, a safe Fed asset, but the bank uses their cash to buy those mortgages. And the Fed promises to repay them the next day at some interest rate. Fed's been doing that. They've been using that to pull more and more money out. Well, I think it was Monday that reversed. The system had finally had enough. So the bank had to do regular repurchases, which are the exact opposite. So they're putting money into the banking system. So if we look at that, if we look at lower interest rates, If we look at the end of quantitative tightening, what's that leave us? We're back to where our federal government is helping the economy expand. We've been in a recession. We've got a lot of fantastic companies that from a stock price have struggled. And now we're turning back on the gas. Who shouldn't be excited about this? I'm ready to go. And then you look at the opportunity of how our world changes with AI, with quantum. What's fixing to happen?
It's exciting, and I did want to touch back on we were talking about value investing earlier, the valuations. I mean, if you've been a value investor for the last 10, 12 years, you've done nothing compared to just to the index.
Yeah,
I mean, and then
you're
look
out of
at
a job.
and then same with the international stocks, flat for all those years, and the last 2-3 years are finally catching up. And I'll just say nothing. I'd say nothing stays the same forever, and something's gonna budge.
Yeah.
Eventually.
That's one thing we were just looking at. We've been looking at the equal weight RSP.
Even recently, it's starting to.
Yeah,
I mean,
starting to move.
Mag 7, you've Meta 20% off its high, Netflix 20% off its high, Nvidia not at its high. Today, the S&P was 20 basis points from an all-time high. I mean,
Yeah.
we're starting to see some movement, which is good and healthy.
Sam was talking to us about trucking. One of our companies, is we got about a 20% bounce in the last 10 days.
It's quick.
Things are starting to move. And what happens if the rest of the market, other than AI, starts working? Oh my gosh, Katie, bar the door. This is going to be good. Probably not going to be good for everybody because there is a lot of people that are so overweight. The Nvidias are just the AI spend. We're fixing to get to the point that the rest of the market catches up. The rest of them. And by catching up, they got a long ways to go. We were just looking at that. Speaking of that, the equal weight to the S&P to the NASDAQ.
Yeah, so the equal weight, every stock in the index weighted the exact same, so it has the same effect on performance, or an equal weight on performance, was the S&P 500 had done 2 times the performance of the equal weight over the last 3 years. And then the NASDAQ was between 3 and 4 times the
Yeah.
performance of the equal weight over the past 3.
It was like the equal weight was up 35, S&P was up 78, and the NASDAQ was up 130 something.
Yeah, I got it right here.
So, if we're playing catch up, where do you want to be? If the economy everybody starts participating. I'm talking trucking. I'm talking people start buying vehicles. We start buying cereal, soap. I can smell Henry from here. I am so ready for him to. I'm teasing.
Hair dye. Get rid of that red hair.
Yeah. There are so many things that we've struggled with. So if we can have a company start catching up, if you don't have AI in your name, it's time. And we've been waiting a long time. We've been waiting since 2022. Not just from our investment standpoint. It's been the market. It's been the economy. We're behind. We get a little help from the Fed, and
The incentives are there. I mean, even with midterms coming up, politics play into it. They're talking about doing taxpayer distributions from the tariff collections. If they do that, I mean,
tell me, what do you think about that?
I'm probably not the guy to ask. I don't like it.
Yeah.
Take your fingers off the scales if you ask me. It's akin to buying votes coming into the elections.
I'm with you. I freaking hate it. When's the last time we gave money out to the public? That was COVID. What happened? Now, I don't like it. But I think I can do a better job spending that money other than the U.S. government. I know it's going to be completely wasted. So,
That's true.
yeah.
That's true. They can't afford to not take in receipts now, whether it's tariffs or taxes. But essentially, effectively, what they're doing, if you look at who pays all the tax in this country, the majority of it's paid by the highest income earners instead of the lowest income earners. So if they take the highest income earners' tax receipts and distribute it back to the rest of the country, it's just a redistributionism.
Yeah, redistribution.
So, it'll be good from a stock price performance standpoint.
I would much prefer to say, hey, these are our tariffs. These are our spending cuts. And then we're going to start paying down 2 to 3% of our debt. That makes more sense. No way that would ever work. How are we going to cut spending?
Yeah.
So I guess at that standpoint, give it to me instead of Elizabeth Warren or something like that.
Yeah. Well, and going back to the debt, the debt's been a conversation for how long? 30, 40 years now.
Yeah.
When is it going to be too much? It could go on for. There are countries out there that have multiples of their GDP out in debt. Not to say that those countries are as great as America, but there's just another example of how America can continue to run on high deficits and high debt. They've been doing it for years, and they're the greatest. We are the greatest country in the world. We have the capacity to continue to do it.
Yeah, you're right. You're absolutely right. And I think I'm just sick of it all. Who's going to be the first person that can stand up and fight for Americans and not politicize something? This is what's best for all of us. And this is what I'm doing for the American Party. Until that happens, I'm
Pretty pessimistic.
I'm pretty pessimistic. And I'm sorry. I'm ready for good things to happen for good reason, for good people, from good people.
Get a relief from everything in the world making you feel bad.
Mm-hmm.
So, well, did we cover all of our bullet points today? I think Chris is probably going to skin us for the time we spent on this podcast.
Yeah, I believe you're right. But everybody, we are super excited. And just like we've been, I think volatility continues to be high, but opportunity continues to be high. And if you have a long enough time frame, everybody should be grinning ear to ear.
Mm-hmm. And volatility, we were looking at earlier, volatility comes in short spurts.
Yes. Very, very short spurts.
And it's coming down at the moment.
So get you a tent, go hiking, go camping. Next time it spikes, just get out of the house, turn off your TV, turn off your radio, and come back to a wonderful, beautiful world. Hope everybody had a fantastic Thanksgiving. If we didn't get to talk to you, happy Thanksgiving, and it is Christmas time. Hope everybody's allowed to be around the people they love, and everybody has a Merry Christmas.
Yep, Merry Christmas, Happy Holidays. If Henry's not on again, which he might not be since he's trying to leave. Do you have anything, Henry?
Yeah, just thanks everyone for the time, and Merry Christmas.
All right. Thanks, everybody. That's going to be another episode of the Black and White Market Minute on Life Planning 101.
Thank you for joining us for Life Planning 101, brought to you by Smart Money Group and Kennedy Financial Services. If you have questions, you can email them to lifeplanning@kennedy-financial.com. Be sure to tune in next week for more Life Planning 101. The opinions expressed herein are those of the firm and are subject to change without notice. The opinions referenced are as of the date of publication and are subject to change due to changes in the market or economic conditions and may not necessarily come to pass. Any opinions, projections, or forward-looking statements expressed herein are solely those of the author, may differ from the views or opinions expressed by other areas of the firm, and are only for general informational purposes as of the date indicated. Securities offered through Calton & Associates Incorporated, a registered investment advisor, member FINRA SIPC. Investment advisory services offered through Smart Money Group LLC. Kennedy Financial Services and Smart Money Group LLC are separate entities and are not owned or controlled by Calton & Associates Incorporated.